The house market in the UK has gone absolutely mental. Stamp duty holiday, lots of free cash due to government grants, and people sitting at home just browsing on Rightmove for fun. Whatever it was, but it cost the average price of a house in the UK increased by 1% per month in the last year, which resulted in the average annual increase of 10.2%, taking the average price of the house to £274,000. And nevertheless, in these crazy market conditions, I managed to buy a house which is 20% below the market value. And in this video, I'm going to tell you exactly how I did it. So keep watching. Hello guys, and welcome back to my channel. My name is Anastasia. On this channel I talk about investing, and especially investing for beginners. This video will be a part of my playlist about investing into real estate. There are so many courses nowadays and so many property gurus who tell you what to do, show their success stories and tell you that investing into property is great, it's absolutely passive and it is impossible to lose by investing into property. It is true to an extent, because as we know, the majority of the richest people of the world, they invest some part of their portfolio in real estate, because real estate is the investment that doesn't lose its value. But at the same time, as a rule, the price of real estate usually grows faster than the inflation. There are so many regulations that are involved into it, and in general, investing into property is not as easy as in stocks and shares or cryptocurrencies. And the statement that I absolutely agree with is that you make money when you buy your house, when you actually make the purchase. Not when you refurb it, not when you refinance, and not when you sell it or rent it. It is the purchase price that is the most important part of investing into real estate. And with this thought in my head, I was constantly looking. It took me over a year to find a perfect property for a perfect price, more than 20% really below the market value. And I'm going to share my whole journey on this channel, so consider subscribing if you want to see it. But in today's particular video, I want to tell you what steps I made in order to find this property and get it so cheap. To understand the market value of the house, you have to look at the price of similar houses on the same street, which preferably were sold in the same year. The house, which is very similar to mine, just opposite my house, got sold last year for £310,000, and I managed to buy my house for £207,000. It does need a refurb, but the refurb will definitely not cost £100,000. It's gonna cost around £15,000 to £20,000. But originally this house was listed on the market for £275,000, so you can imagine how big a discount I managed to get. So let me share with you the rules that I followed in order to achieve this result. The rule number one is patience. As I've already said, it took me over a year to find this house, and in this year I viewed over 20 houses and put an offer on 5 or 6 houses. I knew exactly what I was looking for. It needed to be a door upper. I was within a certain price limit, but I was also searching for houses that were a little bit above my price limits, because I knew that I could make an offer below the asking price. But basically, I think this is the most important thing. You have to be patient, because I was tempted so many times to go and buy a house, because at times it felt like my cash is being wasted just lying in a bank account waiting for a great opportunity. My time was wasted because I could use this money to invest into stocks and shares or something else, but I didn't buy any other houses, and I was just patiently waiting for a perfect opportunity. And it really pays off. Trust me, it does pay off. So patience is number one thing that you need a lot of if you want to find your first real estate investment. The thing number two is consistency. I thought that such deals exist only off the market, that I need to find a deal sourcer, I need to be in the group of some investors, I need to have friends or some other things. I thought that such good deals, they never come up on Rightmove, but they do. And so what I did, I checked Rightmove with certain filters. I was searching in the radius of 40 miles from the place where I live, excluding the shared ownership, retirement property and new build houses. I also had a price bracket above which I didn't see any properties that were coming onto the market. Every single day at a certain time of the day, which was by the end of the working day, so around 4 o'clock p.m, I was searching for the houses that were added to the website in the last 24 hours. This gave me the opportunity to call the agent straight away whenever I saw an interesting property coming to the market and arrange the viewing the same day, or as a rule it would be the next day. And even following these rules, several times when I called and inquired about a certain property, I had an answer that it got already sold, whether it was before it went on the market or straight away after it went to the market. On several occasions the house went on Rightmove only in the morning, and by the midday or by the afternoon it got already sold. Rule number 3 is you have to be ready to act fast. There is no time to waste because there are so many other investors who look for the same deal as you do. So in my case, when I found my property at about 4 p.m. on a certain day, I arranged a viewing in the morning the next day. I saw the house. I knew that there were several more viewings after mine, but I made an offer straight away, and I also put a little bit of pressure on the agent and on the vendor, saying that my offer was standing for 24 hours. So quick reaction is very important, but I think it is possible only if you know the area great. So this is the next rule that I would encourage you to follow. I know that many property investors say that you don't need to see the house, you don't need to know the area, you can look it all up on the internet, all information is there. I agree with that, but maybe if you are just starting and you are not very experienced, then it is better to invest into property in your country for sure, and also in the area which you know, because you want it to be safe, you want it to be rentable, easily rentable, and on top of that, if you ever need to come and overlook the workers that will refurb your house, it is just much easier. So the logistics is another thing that you have to think about even before you buy your house. I was lucky to find a house in the exact village where I live, and I can appreciate the comfort of just being able to go there. It takes me literally 5 minutes, take the keys, go see what's going on inside the house, and then come back home, and I can do it even several times a day if I want to. Another advantage of being in the area where you bought a house is that you'll be able to tell people that you bought this house and you are looking for renters. In this case, you don't need to use the estate agency to help you find the renters, because then obviously you have to pay some commission to the estate agency. In my case, even though the house is not anywhere near being finished, I already have 2 potential renters just from the word of mouth. People are talking to each other, people know me, people know that they can trust me, and I also know these people because they are locals, so I feel more secure renting it to someone who I know. And on top of that, I don't have to pay any commission. I am nowhere near being confident. When I saw the house, I was not confident. I was walking around looking, pretending that I know what I'm talking about, when in reality I didn't have such a good understanding. When you are looking for a do-upper, you will always be competing with builders who will come, look at everything. They'll straight away have a figure in their head of how much the refurb will cost. They'll straight away know where to look and how much money to offer. They will be more confident than you. I am not a builder and I don't have an experience of refurbing the houses, so I just watched some YouTube videos and I read some articles about what I have to pay attention at. So in front of the estate agent, when I came for the viewing, I think I looked quite confident, or at least I hope I did. And so when I was offering the price, I straight away said that I was a cash buyer, which is true. But even if you are not a cash buyer, you can always say that you are a cash buyer and then apply for a bridging loan, because bridging loan is something that takes only several days to set up. It's not like a buy-to-let mortgage from a bank. This is the information that I watched and heard from these investment gurus. Whilst in my situation, I was lucky enough to have enough cash to make this purchase. Cash buyers are usually preferred by the vendors, because if you have cash, then you don't run the risk of pulling out from this purchase because you didn't get the mortgage. With cash buyers, the whole process also moves much faster as a rule, which can be another advantage, and which is something that can make the vendor reduce the price a little bit more, prioritizing cash buyers over the mortgage takers. And the last rule is I was absolutely ready to hear another no. I saw so many houses before this one and I made so many offers that got rejected. At the beginning I would get devastated every time I heard no because someone else offered more money than me or the vendor chose another investor. But this time I was completely fine with hearing no because it was just another no. I think in the last year I must have heard about 10 no's for sure. So this time when I heard yes, it felt incredible, but I think this readiness of hearing no, of being rejected yet again, gave me this confidence of putting a little bit of pressure on the vendor by saying that my offer was standing only for 24 hours. In a way, it was also true because the next day I was supposed to take part in an auction, which was true, which was not a lie, which obviously made the vendor think faster. And another condition that I made is that once the offer was accepted, all the future viewings had to be cancelled. So my offer was accepted the next day in the morning, which was perfect timing because it was about just half an hour before the beginning of an auction, and I know that he was supposed to have 4 or 5 more viewings that day that were all cancelled, and the viewing that is cancelled is one less competitor for you. I hope that my story will make you feel more confident that it is still possible to find good deals with the property even in the current market conditions. They don't come up very often and you will probably need a lot of time, a lot of patience and a lot of money to get a property like that, but the main idea that you have to get out of this video is that it is still possible, and you should have no doubt that it is still possible, because I was doubting, and I doubted a lot. Okay, so more content is coming out on this channel about investing into real estate. I've been waiting for it for a long time. It took us 2 months to complete the deal completely, but now I have the keys and I am super happy. Can't wait to tell you about all the details and all the numbers that I'm going to get, but the general plan is to receive not less than 33% return on investment per year. So I want to get my money back within 3 years. I hope I'll manage to achieve that. Thank you very much guys for watching this video. I hope to see you soon. Bye bye.